Carney will soon end his near 7-year term as Governor of the Bank of England, steering the UK economy through crises and years of Brexit-related uncertainty, a high-stakes, divisive issue that's been impossible to forecast. Good preparation for his next job, tackling climate change. Born in 1965 in Canada's Northwest Territories, the young Mark Carney dreams of greatness on the ice hockey rink. The world of economics calls. He gets his bachelor's from Harvard, a doctorate at Oxford. Carney spends 13 years with Goldman Sachs, then enters public service, eventually governor of the Bank of Canada. The word on the street, a possible future prime minister. But he takes another path, moving to Threadneedle Street to become the Bank of England's first foreign-born governor. The Chancellor says,
"He is quite simply the best, most experienced and most qualified person in the world to be the next governor of the Bank of England."
On his first day, he takes a tube to work. Carney's first 3 years see little movement on rates as he steers the economy through the European debt crisis. But his approach to forward guidance earns him a new nickname.
You've been called, for example, an unreliable boyfriend by an MP. What? Does it just make you laugh?
In his career at the Bank of England, Carney presided over 66 policy decisions, cutting rates 25 basis points, hiking 50. As for modernization, Carney's colleagues in the Monetary Policy Committee remain mostly men. Now Carney will soon become UN Special Envoy for Climate Action and Finance. The salary, $1 a year. As for the BOE, Carney's legacy may well depend on what comes next for Britain. Today on Leaders with Lacqua, we meet Mark Carney.
Governor Carney, thank you so much for joining us on Leaders with Lacqua. So since you started, the UK is a really different country. Could we have foreseen it?
Could we have foreseen it? Well, there's certain things that we wanted to see. So I was thinking, when I first came here, it still very much was in the aftermath of the financial crisis. The anger up and down the country against the financial sector was palpable. I mean, really could feel it as you went out. And there was a job to finish, a great job that Mervyn King and others had started and made considerable progress, but it had to be finished, fixing the financial sector. So that's you never say never, never declare victory on it, but it's substantially different. The system is strong, it's safe, it's fairer. All that has changed. Clearly there were a few political events during the middle. We might get into them. But some of the priorities of the country have changed, and the world environment has changed. So much greater focus on new trading relationships around the world. That's different. Technology that much more at the heart, including at finance. And then the focus on sustainability that is very much top of the news, virtually day in, day out in this country, which is different than it was when I came here. So it has moved on in many respects.
Could we have foreseen Brexit?
Could we have foreseen Brexit? I think well, of course we could have foreseen Brexit. I mean, I lived here in the early 90s, late 80s, early 90s, all through that, the period of Prime Minister Major and others where there are these tensions around Europe. And so they have been there for a while. You layer on top of that the shock of the financial crisis and the economic hit of that. And remember that the 10 years from the financial crisis had been the worst for real incomes in this country since the middle of the 19th century. Nobody alive had lived through something like that as well. So it was going to come out in some respects. I'm not saying that there are only economic motivations for leaving the European Union, but some larger political ramifications out of those events were likely, and you bring them together, and we have the decision and moving forward from that.
Okay, in your time as governor, what did you find hardest?
Well, I think probably the hardest thing in the structure of the Bank of England is we're charged with identifying big risks to the financial system, but also to the broader economy. And if we can take action to mitigate or reduce those risks, we do. And so I hate to say it, but financial crises or banking type crises are conventional risks. I mean, there's been 60 to 80 over the course of the last half century around the G20. So sometimes institutional memory means you take your eye off the ball, either in the private sector or public sector. It happens again. That's what happened in the 2000s. Okay. But once it happens, there's more or less a playbook of how to react. Right. But issues around, whether it's around the growth of asset management, issues around climate, issues around a cliff edge Brexit, those are different types of risks that haven't really manifested in the past, happened in the past. And so you have to identify what could happen and take action in advance to try to reduce it. I mean, that's a judgment. That's a hard judgment. And if you're successful, you never really know. Because, I mean, this is the one area we say that, success is an orphan. Normally failure is an orphan, but here you've taken action and people can question whether the risk really was going to be as material.
So, Governor, given you what you just said, was it easier sometimes being a foreigner?
Well, it was. I mean, I was brought in as an outsider originally, in part because we needed to fix some things in the financial sector. It was a new institution. Tripled the powers, doubled the size, and an outside perspective was thought to be valuable for a period of time. So yes, that was useful. I think the other thing I would like to think is useful, and this is always the case with central bankers, but it's more transparent when you're a foreigner, is this is my only act in British public life. I mean, I'm the governor, and then I'm not going on to some other role in
it means
in the
what,
UK.
You can be more neutral?
Well, I mean, all governors are neutral,
right.
But there's no, my objective, as is the objective of everyone else on these committees. And remember, all these decisions of the Bank of England during my time here have been collective decisions of whether it's the Monetary Policy Committee or the Financial Policy Committee with half outsiders, half insiders of the bank. Mm-hmm. And so everyone signed up to these decisions and these judgments about what could happen with Brexit, what steps we should take in that, what we should do about climate change, all those things. So, but I guess it helps. I would like to think, but I have to be candid, I haven't really thought about it until you raised it, that on the margin, being a foreigner, not coming back would help, but for others to judge.
Up next, Brexit night, as told by Mark Carney.
I tracked the results as they went. Yeah. I was in at, 3:30, something like that, with a number of colleagues. We monitored markets. We wanted to make sure the markets did their job, which was to function, and they did an outstanding job.
Mark Carney's tenure has been defined by Brexit. Uncertainty reigned as the UK voted to leave the EU, a rate cut, then 2 hikes. Forecasts up in the air. Brexit supporters accuse Carney of being a chief architect of so-called Project Fear. But his term is extended again and again.
Would you still have taken the job had you known the ups and downs of the Brexit referendum?
Well, yes. I mean, look, I viewed at the time that as a central banker, and I've been asked to come and help with the financial reforms, the reform of the Bank of England, and candidly also at the same time of making sure that the economy recovered. Remember, we were at least statistically on the cusp of a triple-dip recession at the time I took the job. And I felt it was important. I think I said at the time that this here was where the challenges were the greatest in central banking, and I wanted to contribute. The challenges were even greater, maybe than I realized at the time, but that I've never regretted it at all. It's been a privilege.
Would you have done anything differently?
I mean, not on the big calls, no.
So it's not necessarily policies, but there was a communication at times came under criticism.
Yeah, but I mean, that comes with the territory. I mean, I think the way we look at it, or at least I look at it, is that households and businesses absolutely understood what we were saying. Yeah. Rates were going to stay low. They were going to move limited and gradual. You saw quite a marked adjustment in household business expectations, which were, as important an audience for guidance, because you wanted to give them the confidence that the economy was going to, this recovery was really going to take hold. And in terms of financial markets, they moved along with the data and the committee. And if you look at, absent Brexit events, but if you look at sterling vol or interest rate vol through that period, performs very well. So the markets got it, households got it, and we provided the stimulus. And look, if you look at the track record, we went from on the cusp of triple dip recession to fastest growing economy in the G7, and unemployment went down, inflation went to And at a time when we were still repairing the financial sector, so
was there a window?
Seemed to be okay.
Was there a window?
We're simple people, though, in Canada. We sort of look at those things.
What metrics?
Those metrics,
like numbers.
to say, numbers and stuff.
But was there a window, not only for the Bank of England, but for central banks around the world, where there was a missed opportunity to raise, given what we're seeing now?
Well, I don't think in general that is the case, because I certainly don't subscribe, and I don't think my fellow governors subscribe to the idea of, let's raise rates now so we can cut them in the future. The point is to manage policies so that you achieve the inflation target, in our case, while supporting the economy as best you can. And if you look at the performance of the economy, so I'll give you an example. If you go back to when we first put guidance in 2013, 2014, here, the historic reaction function, what the MPCs before would have done, is they would have raised interest rates by about 150 to 200 basis points. That's because there used to only be demand shocks, not supply shocks. Okay, we said no. We're going to hold and wait for clear evidence, and we didn't raise rates. What happened to inflation? 18 months, 2 years forward. It's bang on below target. The broad-based, it was the right call to make, even though external commentators, the shadow MPC, others said we should have been raising rates all through the time. Now, you can look at the outturn in total and core inflation. I think it's, at a minimum, I'll talk like an economist, it is not inconsistent with what the MPC did. If you want to talk more strongly, it was entirely consistent and validated what the MPC did.
What happened? Do you remember vividly what happened on the Brexit referendum evening when we found out the results?
Yes. Well, we were prepared for that, certainly that possibility. We felt it was, we were prepared for it because our job is to prepare. Even if we felt it was a low probability, we would have prepared for it. So the plan was, people went home, around 7, 8 o'clock. Some people had to vote as well. And then we had people staffing all through the night. And my intention was to come in, somewhere around 3, 4 in the morning, partly for esprit de corps, but if we had to do something to work along. So I tracked the results as they went. Yeah. I was in at, 3:30, something like that, with a number of colleagues. Mm-hmm. We monitored markets. We wanted to make sure the markets did their job, which was to function, and they did an outstanding job. The markets were liquid. Prices moved a lot, but there wasn't gapping. It was orderly. And then in the morning, early in the morning, we prepared a statement, which we had prepared, a week in advance, but you refine the statement when you know you're really going to give it. The Bank of England will not hesitate to take additional measures as required, as markets adjust, and as the UK economy moves forward. And then I spoke to the Chancellor, and we sequenced. The Prime Minister was going to make his statement, and then we followed on from that. But the other thing we had done, which was crucial, is we had been speaking to all the G7 and major G20 governors in advance, and the Secretary of the Treasury and others. And then in the morning, I spoke with them individually. We spoke collectively and made sure that we were lined up behind it.
So in case you needed to act?
Well, in case something needed to be done, which was pretty unlikely, but in case something needed to be done, first point. Secondly, we did want them to understand in advance what our contingency plans were. And then when we put them in place, which was a very large, 300 billion pound facility in place for the institutions here, that was there, that was functioning, that was, and the extent it was drawn on. So, in these situations, unfortunately I've lived through a few, it's better to over-communicate, and it's better to have told people in advance what you're going to do, which we did, what you intend to do, and then when you follow through, remind them that you've told them that.
Is that what we learned in the 08 crisis?
Well, that's what we learned in the 08 crisis, and I'll say in the 08 crisis, 07-08 crisis, I was governor of the Bank of Canada, and particularly as it intensified, before any event in that crisis, Ben Bernanke gave me a call in advance if it was issues with a relatively small bank right up through the Lehman weekend and beyond, and so calling the other members of the G7 and beyond, and having a discussion both about what's happening and potentially what they should do.
I don't know whether you think,
which is full credit to him, Tim Geithner, Hank Paulson that level of communication.
Up next, Mark Carney on climate change as he starts his new job as UN Special Envoy.
There's always a danger of complacency. We see it time and time again in the financial sector.
Throughout his term at the Bank of England, Mark Carney has faced the European debt crisis, trade wars, and Brexit uncertainty. But now, as he takes up his new role as UN Special Envoy for Climate Action and Finance, how's he going to confront perhaps his biggest challenge of all?
Are you sad to leave before really seeing Brexit through?
Okay, as you know, I've stayed a few times in order to be there.
Yep.
And the key thing I felt I needed to do was, so there has been this risk of a cliff edge. We had to get the system ready for the cliff edge. And I felt I needed to put sort of my money where my mouth was to, it's fine for me to say, oh, the system's ready, but I'm going back to Canada. No, I needed to be here for that. And then also, so to have a smooth transition out of the European Union for the financial sector, and then also a smooth transition to a successor. And so I'm pleased that we're going to get the first, and the second is we're going to get both with Andrew Bailey.
Is being a central bank governor a thankless job?
No, not at all. No.
No?
No.
Why
I mean,
not? Why
I know
not?
because, in the end, I mean, your job, my job, hopefully people watching, you first and foremost get thanks from the purpose of the job itself. And, the mission of the Bank of England is to promote the good of the people of the United Kingdom, through monetary and financial stability. I mean, that's a pretty good mission. And so you can feel good about yourself if you're doing your best to accomplish that.
So criticism, I mean, I know you've been called, for example, an unreliable boyfriend by an MP.
What?
I mean, it strikes me that the bank's behaving a bit like a sort of unreliable boyfriend. One day hot, one day cold, not really knowing where they stand.
I mean, it's the nature of these roles, public roles, that you will be criticized, and it's fair game. I mean, it's just. I mean, no, it's not always pleasant, but it is what it is, and you can't go into a public role, whether you're a judge in this country. A member of the clergy, and or a central bank governor, and not be criticized.
When it comes to climate change,
Yeah.
so you were at the forefront, right, of climate change, talking about climate change and how central banks should deal with it in 2015. A lot of central banks have since followed suit. Is there a danger that actually, if things get worse, if there's a crisis, we forget about climate change?
Well, there's always a danger of complacency, and we see it time and time again in the financial sector. On climate change, the question of societal attitudes, and unfortunately, I mean, one of the things we do, it's not unfortunate we do it, but we oversee the insurance sector, reinsurance sector, so we see, the actual physical manifestations of extreme weather events, and we see where that's likely to go, and I'm afraid what's baked in the carbon, the atmosphere effectively, is more and more of these, even if we start to make serious progress. And the reality is right now we're talking about making more serious progress, but the curves are not bending yet, and they need to start bending very fast.
Why aren't they? Because people don't have concrete examples, because they don't believe it, because it's hard.
Well, I think let's maybe step away from the first few, and it's hard, and what there needs to be, and I think what we want to, one of the things the UK wants to do with COP26 this year in Glasgow is to, at a minimum, get a shared understanding, particularly in the financial sector, of what the transition is supposed to be, and then that every company, whether they're in the real economy or the financial sector, can answer the question, what's your plan for the transition? And as you get that out, and it's just one of the things that's looked at, then people are more deliberately looking for solutions.
But what surprised you the most when you look at this? So is it the more questions you ask to these institutions, the more question it actually raises from them, or the complexity of it?
Yeah, I think that what surprises me is that, at least initially, very few had thought through some of the... So there is an inconsistency between the physics of how much how many greenhouse gases can be in the atmosphere, and a 1.5 or 2% target, and the stock of hydrocarbon assets that are on the books of globally. And so, okay, there's an inconsistency. That means not all of them. If we're going to accomplish our objective, the net zero objective, not all of them will be burned. If I'm sitting in the financial sector, I'd be thinking, okay, well, which ones are most likely to be used in a transition? Which are less likely? How do I assign relative valuation? It's just something I would ask. Now, different people, different institutions would have different views on the answers to those questions. But you'd think that everybody would have thought through those questions. And that's now starting to come center stage, as is the question of which renewables and other alternative energy will come in. But those questions around the transition, I mean, these are tens of billions, if not hundreds of billions, questions in terms of valuation, which will play out. So yes, 2-3 years ago, you asked people about that, and they think it's an interesting question. Maybe they should look into it. Yeah, that's kind of surprising. That's not the way things are moving now. It's moving center stage. People are asking that question, and it's of course. Key thing, if I may, the energy companies are supplying energy to the real economy. And so it's as much, well, what's the consumer products company or the services company, what's their trajectory, what's their plan to net zero, which of course feeds back up the chain.
But should it be mandatory?
Should disclosure be, yes, disclosure should be mandatory. There's 120 trillion of balance sheet between banks and asset managers and others who want TCFD disclosure. It's getting refined. We should refine it. And at COP26, I think we should look for jurisdictions to make it mandatory. And you had some of the largest asset managers out recently saying to all their companies they're investing in, we want SASB and TCFD disclosure. And it's the job of the public sector to organize.
But what does that mean for passive investments?
What does it mean for passive
investments? Unless the amount of passive investments that asset managers have, unless that kind of scrutiny is also done on that, how much real difference are we making?
Well, you get a couple things. One, I think if you're a passive holder, you do have governance responsibilities for so your judgment, which goes back to disclosure. But you look at, well, how are things priced, and are they priced at the margin, or are they priced with the block? And so you're going to have an active investor on the margin. Look, the one thing that traditional investing looks at, discounted cash flow, looks at credit risk, looks at, and you have a macro view on interest rate risk, foreign exchange risk. Haven't had a macro climate lens on top of it. I think my personal view is what's going to happen is the climate overlay is going to become as important over time as the other considerations. So you're going to have to put that in, and there will be money on the table if passive is dominating for a period of time, and there are companies within that index or sub-index that are either ahead of the curve on the transition or behind the curve. And long one and short the other. That will be there. And so what that tells you, what tells me is that active investing has an important role in all this, and will have an enduring role.
Governor, if I speak to you in 5 years,
yes,
what will you be doing?
I don't know. I don't know. That's good. Let me know. You probably won't want to speak to me in 5 years. Whatever I'm doing, I'll be. No, I honestly don't know. I've got. When I leave this, I've got some responsibilities that for the Prime Minister here and the UN on preparing COP on the finance side. So I'll work on that, and that's as far as I can. That's my horizon. The horizon is November of this year.
Mark Carney, thank you so much.
Thank you very much, Francine.